Hi, good day, guys. Blessing the vibes. So, first thing before we start anything, we want to check the calendar and see what's popping. So today we see have a bank holiday. Um, Tomorrow, wait out. That's some red folder, but I NZD. Wednesday, FOMC. See these red folders on them? I'm saying they shake up the markets a little bit. So, so Wednesday at 2 p.m. our time. Yeah. Okay, look out for that. Along with Tuesday, 8:30. Right. So that is economic calendar for the week. All right, straight to the chart. Now, what you see since this whole weekend here, we are sending some trades. We catch our wave yesterday, but we had to close off because Bitcoin was still moving sellish. And you see this analysis, I send this would be Friday night, Friday afternoon. The whole weekend I was this long, boy. I take a log at what price is this? 107, 178. And then watch the time yesterday, this actually move. It did a short squeeze, 7 o'clock in the night, Sunday. Like what weekends has been at. Right? But I mean we still get something, give thanks. I take I take it. I take that long because I don't know. Well, I mean, I'd be a little more active. I same thing. Polyfib too, right? And I know plenty of people have questions about like how it is we use the fib too, right? Now this fib, right? I just gonna delete this, right? How it is we use the Fibonacci tool. The Fibonacci tool is a retracement tool, right? So you look for retracements, then for extensions. So I see plenty people use it different ways, but I use it how it does make sense to me. So the move start, which part the move start? The move start after this push up, pull back. So the move start here, right? It fill this fair value gap, this imbalance. So this is the zero price here. And then which part it end? It end up here. So there's the 100 price. So you pull the Fibonacci tool from the 100 price, which part it end to which part it stop, right? So the move went from 0 to 100, right? And then from this level here, you get a pullback, you get the retracement. The retracement now, it is the 38th level. It didn't go so far as the point two. Now, this level is a real steep level. Anytime you get a pullback like these points, whew, Chico talk out. Well, it didn't get it so far, but it did pull back. It pulled back here with the part we initially entered, pull back again. You understand? Because you just want to get a good entry, because you know for sure the follow up move going to be something like what we experienced here. Bang, bang, right? And then what the extension to this also give is what the Fibonacci to this give is extension levels. So you get the move is from 0 to 100. Which part the move start, which part the move ended. You get a pull back now, right? Retracement. And what it is you're looking for is an extension target. And that is exactly what this is give. So the extension target for this move, potentially, trading, everything is potentials, probabilities. That's the game we play in trading. You're never 100% right. So the extension target, possibly the market will go to 116K. So 116K is the extension target. They just offer this simple analysis that we just run through with the Fibonacci extension tool. You measure the move from which part it start to which part it end. You pull it, it do the retracement. What's the next possible move now to this next level? This is take a minute to pull and analyze. Which part the move start? Boom. And then from there, you just let the move pan out. So in this scenario, if it is the move is really to continue bullish, we have our target at 116,600. And what does we do? We set we alert here. So whenever it is the market do go up there, you get a notification, or you can set your take profit as well. These other levels, I'll just zoom in a little bit, right? These other levels that these are other notifications that I mark out too much. So the move that we are planning to capitalize on is this, but I want to see the price push up to fill up this fair value. One thing we trade always, and that is liquidity, that is imbalances. Yeah, look for these imbalances where price moves sharply and create these imbalances here. I'll show it all. Where price moves sharply and fill out this and this area here, that is an imbalance. Let's just zoom in a little bit so you can see it a little better. This year, price just move. Price just move sharply downwards. And following those kind of moves, what has happened is the market is want to correct itself. So yeah, in your analysis, but the market is acting, it is seek liquidity, right? It is going a direction to hurt the most amount of people. This was an impulsive move over the news about the euro tariffs. Trump say the euro he gonna increase the tariffs on euro 50%, I believe. So the market reacted badly to that, boom, caused a sharp spike downwards. Right? Now this creates an imbalance here. So if it is we know facts, markets engineer to seek liquidity, and it also engineer to correct itself from these kind of impulsive moves. So this is our target. This is our price target. So we enter with the expectation, right, that it could potentially, or you listen to my words why I use with this thing, it's no 100% sure not to with this. Because I wanted the market to when it is you were watching it here, I wanted it to sweep 150 and then sell it. See, just you do get 100% in this thing. So you potentially, this is the target, this is the zone, the market going up here, it could come back to fill this imbalance that was created. So if it is in our buy, that is our target, right? 110,400. Boom. Take profit, you're out of the market until, right? When it is the market set up, you get something again. Because or you seen, or you in the market a little bit, so you're seeing how it will just do one thing. It is consolidate. It could buy, it could sell. But the beauty about trading is any which direction this market go, you could earn profit. If the market in an upward trajectory, the market buying, we're looking for long positions. If it is, boom, the markets you see, you're observing, hey, boy, I have a potential target at 160 now. So according to my Fibonacci tool, according to my analysis, but only taking buys. If it is you see this thing start to turn, how about you buying and take a short because when it is the market selling short positions, so any which way, all it is you have to do is wait on it. And that it is all these results or you see not selling and analysis is because we see some things happening in the market and and right, you identify certain zones and then you just capitalize on it. Dog game back zone boy. You want for dog. Yeah. So the next move, right? I don't know anybody gonna look for a trade. So right now, I personally won't take a trade as yet until I see some kind of upward move, let us think flow good, and then right, a big part of trading is patience. And sometimes like the only thing which is you have to have. Today's a US bank holiday, so I mean, mightn't really get nothing to really do anything sustainable that you can make a little 10%, 15%. If it is we get a sharp impulsive move up to clear this, I would 110.5 taken, the fair value got pair filled properly. Hey, we can look for a shot. But a bank holiday today, so that might be popping. And yeah, yeah. And next thing, I'll make a little video and send it to or private in terms of like how it is we use this compounding system because we able to get consistent results, guys. But it's important for you to understand two things really. We're never going to be right 100% of the time. Yeah, the trade we sending out here, I mean, 100, these past 2, 3 weeks, 100% wins on the analysis. But some weeks we going to take a loss. You don't know it coming right around the corner. Always manage your risk, never get glad. Sometimes we call on them levels start see precision, but you're going to experience some madness in the market. What to do? Always manage your risk. So that when it is your compounding, himself, but you get a loss, a small thing. And then you know your wins always going to be greater than your losses. Right now in total, we have I believe it's 82 or 84% win rate. When it is you check up all the results over time, which is phenomenal, astronomical, or can't think could say it. But I don't say nothing if it is the 1, 2 trades, 3 trades you take losses on, you set back yourself 40%, 60% loss. And with that being said, another thing we will need to do, because you seen like how it is the market's moving, real extra easy because of all the tariffs thing and all this back and forth and whatever. Personally, me, I like to look for precision entries and send follow, right? Because I understand like oh, you're now trying to make it. And then like me too, I do like to see no big drawdown. I'm not going to 10, 15, 20% drawdown and thing. See how fast I these close trades sometimes, as it is the market's not going to be. So because the market's moving a little extra, what it is we will probably have to do is dial down the risk a little bit. Instead of paying 50% of your account, you might do 40%. And then we have to do a little swing. We might have to do a little swing trading a little bit. So when it is you put less risk on the trade, that would allow you to manage your portfolio a little bit so that you could stomach a little, even if you see a minus 15% loss, right? You only put 33% on your account on the trade. So then you're still within the, hey, I only risking 4 or 5% on my total account. Understand? So we have to dial it down a little bit because of these little extra thing in the market. Because you want to be in a good position, right? But you also have to be comfortable that hey, if it is in a drawdown, it's not no Jones, it's not no Jones because I manage my risk in correlation to what my account is. And yeah, a little bit by little bit, we'll just continue building. Um, and as always, invite everybody to like, well, I mean, do your own research. Don't just take we word for it. Yeah, we are good results. We are consistent results, but it have other things out there that other people out there could always learn from. Um, use the signals we send, build your money consistently over time. Understand, hey, we mustn't build tonight. The thing is, you're going to build bank, but you're going to take some time. So give yourself that time. When it is you compare trading in correlation to most other businesses, when it is you compound your results in trading and you understand the process, hey, this is going to take a year to make $1 million with the consistent results, right? And then because you're consistent, you understand, hey, I can run in the market make a 20% on my bank, and make a couple of millions, have a good day. Go and start to make one personal investments, real estate, businesses, right? And have a nice little portfolio. Like personally, we have a book now and started itemize all report, everything in the portfolio because it's that time. It's that time. Build our bank, earn in our bank, then invest the earnings. That the protocol always. Right. So I'll make a little video again about the compounding and upload it. And yeah, they function, they build. So for the day so far, if anything, if it is we get this move up, we will take it. If not, you just chill. Tomorrow a better day. And our thing is always consistent wins. Always manage risk. Look at um the biggest asset managers worldwide. They have risk management, risk management departments, right? You never go all in, always manage a risk. Despite what our next man will tell you, what you see our next man again, should go poor luck, is not see poor luck. Take your time and give yourself the time. You're gonna make it. But we have to stay consistent and we also have to always manage. Right? So you be safe, have a good day. I'll upload this and yeah, tomorrow we do this again. But